Today in this lesson, I'm going to show you how to prepare a rate account, which is very important topic in other payables and receivables chapter. Okay, today we are going to solve this question by following an example which is taken from Cambridge IGCSE Accounting past paper. Okay, this chapter is very complicated for many students because here you have to write a lot of things. You have to adjust the amount with previous year and the next year. Okay, and you have to calculate here the amount which will go to the income statement. Okay, so today we are going to follow some steps to complete this account here. Okay, so look at here on the board. Here we know there are two types of account for this other payment and receivable chapters. So one is for expense, another one is for income. Okay, what are the expense account? There are so many expense account like rent payable account, commission payable, interest payable, stationery account, rates account. We'll do today now. Okay, so these are the expense account. Okay, for this type of account we have to follow these procedures. Okay, so what is here? Unpaid. Okay, if there is any amount which is unpaid in the beginning of the year, then we have to treat it as balance PD, and we have to record this balance PD on the credit side here. Okay, then if we see any amount which is paid in advance, so we have to write as balance PD in the debit side. Okay, these two are opening balances. Okay, this will be written in the question. Okay, then what is here? Unpaid amount, which is closing amount. Okay, some expenses are not yet paid at the end of the accounting period. Okay, so this will be balance CD and you have to record on the debit side here. Okay, then at the end of the year, if we see that we paid any amount which is advance, which is paid for next year, this will be balance CD and we have to record on the credit side. Okay, so these four stuff you have to remember. And then all the payment made by the business for this type of expense will be written as cash and bank. If money is paid by check, we have to write bank, or money is paid by bank transfer, also we have to write bank. And if business paid any amount in cash for any expenses, will be written cash, and this will be written on the debit side here. Okay, so if you can remember these 5 important topics, 5 points, it will be quite easier for you to prepare this type of expense account. Okay, so let us have a look at the question on the screen. Chen is a retailer of men's clothes. Okay, his financial year ends on 30 January. Okay, this is also important to know the financial period. Okay, accounting period. So here his business, the closing date for his business is 31st January. Yeah, so let us write here 31st 2019. Okay, now my question is, what is the beginning of the year? Okay, so it will be here 1st February 2018. Yeah, so this is the accounting year. So opening balance will be on 1st February 2018 and closing balances will be written on 31st January 2019. Okay, fine. Now let us have a look at the question once again. The annual rates of Chen's shop are $960. Okay, so annually he paid $960. Okay, so this $960 for his expense. Okay, this is the rate for his business for the year. Okay, so you know this is an expense, so this expense will go to the income statement. When Chen prepares income statement at the end of the financial period, then Chen has to write this amount in the income statement. Which section? There are two sections of income statement. One is income section and the other one is expense section. Okay, so this will be under the expense section. Okay, this value will be written as income statement here in this account. Okay, so I'll show you later. Let us have a look at the question once again. On 1st February 2018, Shen owed rates $240. Okay, so $240 owed means owing. Owing, outstanding, unpaid, accrued, area, these words are same. Okay, so owed means unpaid. Yeah, so this is an opening amount, so this is an opening balance, so this balance will be written as balance BD on the credit side. Yeah, so let us write the balance PD here. Okay, so first of all we have to write the name of the account. So we are doing here rates account. Okay, very good. So here we'll write balance PD, and date for balance PD is already given. It is 2018 February 1st. So this amount is unpaid, so this will be balance PD on the credit side. The amount is here $240. Okay, now have a look at the question once again. He paid rates by bank transfer on the following dates. Okay, what is written there? 2018 March 31st $640 and October 31st $720. Okay, so look at here, we already know that all payment will be on the debit side. So if this payment is made in cash, we will write cash. If it is made by check or bank transfer, we will write here bank. Yeah, so in this question the payment is made by bank transfer, so we will write bank. Okay, so this bank will come on the debit side. Yeah, so let us write here on the debit side, date first 2018 March 31st. Okay, so we will write here bank. So amount is here $640. Okay, so we have one more transaction on 31st October. So same amount, so same thing, amount is paid by bank transfer. Okay, so let us write here the date again, 2018 October 31st. Okay, we will write here again bank, and the amount is $720 on the question. Okay, so we recorded these three transactions here. Okay, now let us have a look at the question once again. What is the requirement here? Prepare the following accounts in the ledger option for the year ended 31st January 2019. Balance the accounts and bring down the balances on 1st February 2019. So all the transactions already we recorded. Okay, the first line, the annual rates of Shane's shops are $960. So this $960 is the expense for Shane. Okay, so already we know the rates is an expense. Okay, we are doing now expense account, not income account. Okay, so we are following this expense accounts procedures. So here rates is an expense. So for a year the business pays rent $960. Okay, this amount will go to the income statement. Okay, how to transfer this amount to the income statement? So here we know these rates will be written under the expense section of the income statement. So we will write the double entry. The journal will be income statement to be debited and rates account to be credited. Okay, I repeat, income statement to be debited and the rates account to be credited. So we are doing rates account, it is credited, so we will record on the credit side. Okay, so let us write here date 2019. So we have to transfer this amount to the income statement at the end of the day. Okay, which is 31st January 2019. So January 31st, so we have to write here income statement. Okay, so here the amount is given in the question, $960. Okay, so all the amounts are here included in this rates account. Now what to do? Yeah, we have to balance it. Okay, so how to balance it? What to do? Okay, to balance it, we have to compare this dollar column to this dollar column. Okay, we have to check which column is greater in terms of money, the value. Okay, so if we compare, we see this column, this debit column is greater. Yeah, okay, so let us add up this column. So if we add these two values, we get $1,360. Okay, now we will take this amount to the opposite side. Okay, opposite dollar column. Okay, so let us take it here. So many of you make mistake here when you balance it. You don't know how to balance it, but it is quite easier if you understand. Okay, so we transfer the same amount from the debit column. Okay, so now what to do? We have to subtract this and this value from this total. Okay, so what we get? We get here $160 dollars. Okay, so what does this amount call? This is the closing balance. Okay, so this is balance CD. In the question it is written that we have to balance the ledger and we have to bring down the amount. Okay, so here we wrote balance CD, which is $160. Okay, so let us have a look at here on this expense account. So closing amount is balance CD on the debit side. No, we did not get debit side, we got on the credit side. Okay, this is balance CD. Okay, this is an closing amount. So this CD means this amount is paid in advance. Okay, this amount is not for this accounting period, this is for next accounting period. Okay, so this is a closing balance, so we have to write the closing date, which is 2019 January 31st. Okay, now we have to bring down this amount. Okay, how to do it? Yeah, we got balance CD on the credit side. Let us come on the debit side and write here under this total amount balance BD. BD means brought down. Okay, it is $160. Okay, now what is the date for balance BD? In the question it is clearly written 1st February 2019. Yeah, so let us write here 2019 February 1st. Okay, even if this date is not written in the question, we know the date for balance BD will be the first day of next accounting period. Yeah, this is how you need to prepare any kinds of expense account. Okay, if you see in the question, that means if you understand this rates account, you can prepare all about expense account. Okay, and most importantly, please learn these points here. Okay, so if you remember these things, it will be very simple for you to prepare this account.